Stocks down big again today. All the indexes are down big. Happened very quickly this morning. Why is that? Well, CPI data came out worse than expected. Pace of 8.6% per year. They were hoping for a decrease from 8.4, but early this morning there was rumblings that it was going to come out worse. It actually did come out worse, but that's not it. Folks, if you or somebody you know wants to understand what's going on in the market, why it's happening, please forward this video on to them. Helps us out a lot, and it'll be very useful for them. So, what else happened today? Well, first off, $5 a gallon of gas. That was a big reason for the increase in CPI, and it's only gotten worse since the May numbers came out. 2, I also read today the banks are now expecting, because of this recent CPI information, inflation information, that they're expecting now the Fed to increase the interest rates by 0.75% at the next meeting. That is a big jump, guys. That is the way the Fed fights inflation. They raise rates, which causes banks to lend less because consumers want less borrowing, and that causes everything else, inflation, to go down, demand goes down. Now, I'm not going to go out on a limb and say we're in a recession, but it feels like a recession even though unemployment's low. Go look at past recessions. Of course, unemployment is a lagging indicator, which means unemployment happens after the recessions hit because people go, wait a second, we got to be careful. Let's lay people off to conserve our money. Now, is this a bad thing? Guys, there are cycles. In life, there are 3 guarantees: death, taxes, and cycles. We're gonna have cycles. We will have a recession. And I'm gonna say this till I'm blue in the face over and over and over. If you're new to our channel, you're gonna hear this. If you start to watch this more and more, you're gonna hear this over and over. Save your money, live below your means. If you're able to do those things, yes, there might be blips of you losing your job, but if you live within your means, you can easily absorb those problems. And even if you do keep your job, but maybe your hours are taken away or your rates taken away, you'll be able to be fine during recessions. Recessions are the best times for regrouping and getting yourself better for the future. This is red. There's a lot of red out there. I get it. It seems scary, but it's not scary to somebody who is prepared. Another thing that's happened about recessions, there's a thing called the yield inversion. Today, the 5-year and the 30-year treasuries inverted, which means people were willing to pay, the government was willing to pay more for a 5-year bill than a 30-year. Because usually you get more interest rate as you take a longer term risk. But when they invert, it means people see the short term being worse than the long term. That's when usually you see a recession happening. Does that mean for sure? No, but it did happen today. And the spread between, I think it was a 2 and 10 year, got to between 0.13%. How does it end up? I don't know. But these things are not a good indicator for recessions. But again, I implore you, be okay about recessions. This is why you save. The average viewer is on our channel because they have extra cash they want to invest. That's awesome. That means they probably live within their means. If you can cut back a little bit, yes, I understand. It then leads to less spending. And if everybody does that, we will hit a recession. But your job is to take care of yourself and your family. Use a recession and a down stock market to learn more about investing during bad times. Warren Buffett always says, be fearful when others are greedy, be greedy when others are fearful. If you've been watching our channel for a while, when we saw immense greed, we were made fun of and said, we don't get it. And now those exact investments that everybody said we were too dumb to get are down 80, 90%. The good ones are only down 50 or 60%. It's going to get worse. Guys, I say this in all of my videos. This is where I think we are. This is a bull market and a bear market. Everybody's euphoric. This is awesome. This is great. Oh, there's a dip. I think we're here. I think in the last few weeks, we had the bear market, rather the bull market, bear market rally. I think we're in a bear market. We might now be here, but I don't know. We could bounce back, but I think we're definitely somewhere in this range right here. People got suckered back in saying everything's okay. I gave this analogy yesterday in our video recapping yesterday's big down day. I was at the bank yesterday morning. The bank teller, not the bank manager, nobody like that. The bank teller asked me what I was buying. I said nothing. And I said, what about you? He's like, oh, I'm buying everything. Amazon, Tesla, Nvidia, and what was the fourth one? Oh, Coinbase. And I was like, oh my gosh. As of this morning, all 4 of those stocks are down way more than the market's down right now. Why? Those are the hype stocks that made this happen, and those will be the biggest ones to fall. That's just reality. Now, back to the banks. Guys, banks are morons. Bankers are morons. All they're going to do is they're going to look at the recent events. They have recency bias to the max. So all along this run-up, they were lending. Why? Because nothing ever went bad. What happened on the way down? We saw it in the 2007 crash. I was buying homes for $10,000 that banks were lending $100,000 on just 1 year before, and they wouldn't give me a loan for $10,000 to buy the houses. I just had to pay cash. Why? We don't think houses are a good investment. So let me understand this correctly, if I could. When the house was $100,000 and the average rent, and it was in bad condition, and the average rent was $800, you thought it was a great loan. Now I paid $10,000, put $30,000 into it, so I'm into it for $40,000, and now I get $1,095. It's a bad investment. If you don't look at this and realize how stupid banks are, there's your evidence right there. You might sit there and say, oh, that's just some banks. It was all the banks. It took me 10 years to get a loan on the 100 homes that I had at these rents and at these investment levels. It took banks that long. And guess what? When the banks get more tight with their money, it causes people to borrow less because not everybody's flush with cash. Most of the people borrowing from banks during the good times are trying to grow very quickly. They don't have the cash to put into it, right? So when the banks start to tighten, those same people can't buy anymore because they don't have the equity to go put more money down. So before a bank might say, oh, we need 80%, we'll give you 80% loan. If they drop that to 60%, all of a sudden, instead of having to come up with 20% down payment, you have to come up with 40% down payment. What's going to happen? People aren't going to borrow as much. They're not going to hire as many people. It's a cycle. And that's the way we're in. We're going to be somewhere in the cycle at some point. Now, we'll end up like 07 and 08. I'm not saying that. I don't know where it's going to end up. All I know is it's not going to be as easy and as profitable as it was in the last couple of years, the last few years. And that's fine. In fact, if you're a true investor, this is all good news to you. This is all the things you want to hear. Why? Because your job as an investor, your job as somebody looking in the long run, is to invest month in, month out at good businesses at great prices. It is absolutely possible to buy great businesses at great prices. You just have to be patient. You have to be ready to say, I'm going to buy this great company. I was just upstairs in my office before making this video, selling puts on great companies at great prices. What that means is I'm selling people the option to force me to buy stock I want at a price lower than they are today. And if I get placed those shares, that probably means the stock has gone further lower than the price I set. And I'm okay with that. In fact, I'm excited about that because you know what I'm going to do? I'm going to do even more puts at even lower prices and dollar cost average in the investments I want at the prices I want. Every great investor in history has done this. Watch our videos, understand this. But most importantly, if you want to learn how to make money during a crash, click this next link above and watch the next video. Thank you very much.